Hi, good morning. This is Jim Reppond, and welcome to Seattle Real Estate Chat. I'm joined here this morning with my co-host, Rhonda. Rhonda, would you like to introduce yourself?
Sure, Jim, thanks. I'm Rhonda Porter. I'm a licensed loan officer with Mortgage Master Service Corporation. I'm author of the blog, The Mortgage Porter.
And I'm a real estate broker with Coldwell Banker Danforth. So today's topic, for those of you who don't know already, is about waiving contingencies and the risks associated with that. So the pros and cons and why that's such a hot issue. Is this market in Seattle, and it's not true everywhere, but particularly in the most popular areas of Seattle. So let me just give you some examples. If you were shopping for a home in Queen Anne, Green Lake, Madison Park, Magnolia, downtown to a large extent, Capitol Hill. Those are all very high demand areas where inventory is very, very low and the number of buyers is high. And there's typically between 5 and 20 offers on a property. That's sort of a good range. If it was under 5, it might be overpriced or have some other concerns. And if it was as many as 20, it was probably a little overpriced with the idea in mind that they would get a lot of offers. But I've seen everything in that range on a consistent basis for the last 3 months. And there's no reason to suspect that's going to change unless all of a sudden sellers decide they want to sell their homes. Right now, we just don't have many sellers wanting to get on the market. And let me address that real quickly first, because I'm sure there's a lot of people going, well, why? Prices are higher. They can get more for their home. They're in such a great position. All of that's true. And if you're sitting from a seller's position, you need to have a place to go to. So if they don't have a plan, like let's say they're transferring out of area, it's very difficult for them to have the trust factor to step off that cliff, if you will, to sell their home because they're worried they may not be able to find another home because the inventory is so tight. So it's kind of a self-fulfilling prophecy of tightness here. So something's got to give. And of course, as prices rise at some point, that's going to reach a point where sellers will go, hey, I'll sell it if I can get that much for it, no matter what. So this won't be forever, but it is a period where we're having to deal with tight inventory. So Rhonda and I both deal with this on a fairly regular basis where clients are trying to find the best way to when there's those multiple offer situations where there's 5 or 10 offers. You have to stand out among the other candidates who are making an offer. And these days it has to be very carefully done in a way that's not discriminatory. You can't say, well, gee, this is some really good-looking young couple with a family. That doesn't work. You can't do that. That's discriminatory. It wouldn't be fair to someone who maybe was single or gay or of a minority that might not be the same as the seller. All that kind of stuff. We have to be very careful not to let any of that creep in. So we're looking at very cold, hard types of things that would make the offer more attractive. So obviously, money is number one. So the higher the price, the more motivated the seller will be. But if the property is going to be financed, the higher price a buyer may offer, the less likely it will appraise at the price that would then get at the financing that the buyer might want. So if they're putting 10 or 20% down, if they offer, say, $150,000 over the list price and it doesn't appraise at that, then that means the only way they'd be able to afford it would be put 30 or 40% down, and they may not be in a financial position to do that. Rhonda, can you speak to that a little bit? Have you run into buyers who have gotten in a situation where they bid more than what they can bite off and chew for down payment?
I've been pretty lucky that the ones that have bid significantly more do have the funds. So they are prepared for the appraisal coming in lower. Because 20 or 30 people bid on a home and bid it up 100,000, which we have seen, that happen in the Seattle area, doesn't always mean that the appraisal is going to go that high, because appraisals do have a lag time, because it's based off of closed transactions. So I've been pretty lucky there where people have been prepared and they know the appraisal odds are is going to come in, 50,000 or 100,000 low. Because we are talking about more probably in a price range of homes that are, 600,000 and up, where this is going to happen.
Yeah, I was going to say this is particularly true in a segment of the market that's the most frantic or frenetic right now, and that is that mid-range home between 600 and a million two. That's sort of the above median, but the kind of home where there's just a whole bunch of buyers for. So yeah, I think that probably that it makes sense that your buyers are more prepared for that, because that's the kind of thing that they've really thought about heavily before. Well, if we offer for this much, how much is it going to cost us? So that part is thought out. I think sometimes maybe just talking about right up front, the waiving of the financing contingency in general is one that is a big step for people. Rhonda, would you talk a little bit about what the risk would be? Let's say if I had a client who said, hey, I really want to make an offer on this home, but I know that there may be some cash offers and I want to compete against those, and I want the seller to know that financing is not an issue. You've pre-approved me. So how about if I just waive the financing contingency, and if I back out, they could just keep the earnest money.
Right. Well, I think you've hit on a good part right there. It's like they do have to be prepared to lose the earnest money, and make sure they're fully pre-approved, not just by their loan officer, because some loan officers will go further than others in the pre-approval process, shall I say. I mean, you'll probably want to make sure that their information has been ran by underwriting. And then also too, there are some things that tend to come back like further into the transaction that may not be done with the pre-approval, such as ordering the tax transcripts for the borrower. And like during this time of the year for the IRS, it can take a long time to get those back, even if you do order them at the pre-approval part, which that could cause a delay or an issue with the transaction, as well as there can be issues with the home. So I would say that if you are a Seattle home buyer, and you are thinking about, waiving your financing contingency, make sure that your loan officer knows about that. And so that you can make sure that you've been fully pre-approved by an underwriter and that every stone has been unturned, just to try to reduce potential risk with your transaction. And then let the lender know what the home is too, because sometimes, the home might be a fixer-upper and you might be thinking as a buyer, this is stuff I can do, or I'm going to make these changes after I move in. But they might be issues that a lender would actually want to have fixed. And in this market, the seller might be saying, hey, I'm not going to fix that.
Yeah, so that sort of brings up the point that if you're waiving the financing contingency, you're waiving all of the things that the pre-approval is basing that a pre-approval on. In other words, for example, like the good example, one of the best examples is the one you just said of you're basing the approval of the loan on the fact that the inspection is passed to the point where there's not some significant thing that needs to be done that the lender may require in order for that approval to go forward. Another example of this, and it's a little rare, but it does happen, is the insurance contingency. So it's actually not a contingent. There's a small thing about insurance, but for the pre-approval of the loan, one of the things is you're going to require insurance, and the insurance will sometimes come back and say, you know what, the house is not the problem, but you didn't apply for or get a binder or anything in advance, and that particular borrower maybe had a couple of claims on another property a few years ago, and we won't insure them at all for anything. And if that hasn't been discovered early in the process, you're kind of, again, hanging out in the wind. Have you had that happen?
Oh, I haven't had that happen, but it can. And again, the insurance binder is typically ordered later on in the process, most oftentimes after we have the appraisal back.
And that's fine if you still have a financing contingency where if something came up, well then, gosh, God forbid, then you couldn't get the financing and therefore you would be able to get your earnest money back. But if you've waived that contingency and then you find that out, it may be prudent to get that insurance binder early on before you go through that process of waiving that financing contingency. The other one that's not often used, but it can make a difference for, especially if the listing agent's savvy and sees the advantage of it, is that verification of information, which is the I think it's clause X on the purchase and sale agreement. Thought I had one here I could share. Hey, hang on, I'm going to put this on screen. Yeah, okay. So I can't zoom in here, but this is the last page of the general purchase and sale agreement that we use here in the Seattle area by the multiple listing service. And down at the bottom, I don't know if you could see this. Sorry, it's too small. But paragraph X talks about the information verification period and property condition disclaimer. So there's a 10-day period that the buyer has to verify that all of the information provided by the seller or the listing firm is in fact accurate. And they can, if they can give notice of termination if they find that it isn't and get their earnest money back. That's kind of a wiggle clause, and it is helpful for a lot of people to say, oh, okay, let's get that out of the way, because that's just one more thing that makes you that much more of a solid buyer during the transaction process. But I would say the most common one is the inspection contingency. And this is the one that, again, can be scary, because if you're waiving it without having done an inspection, you're at risk because you don't know what you don't know. And that is often the case where something is, inside the crawl space or inside the walls, or something about the furnace that you just can't easily see as you're walking through the home. So that's why a lot of people do pre-inspections. How often are you seeing pre-inspections, Rhonda?
They're very common, very common. And it's kind of nice when they are done too, because typically with these transactions that are taking place in the greater Seattle area, the closings are 30 days or less, because that's the other way that they try to sweeten the deal for the sellers, to have a quicker closing. And which means that we need to be able to order the appraisal right away instead of waiting for that inspection to be done. So it's helpful actually if they are done in advance.
Yeah, I agree. The bad news is that's an upfront expense for your buyer. So if there are 10 people doing a pre-inspection, only one person's going to get that house, and an inspection can run, typically is probably between $400 and $600 for an average home. Can be higher, might be a little lower for a condominium or something like that. But you can imagine you're making that investment just to inspect it, just to get the opportunity to make an offer, of which you're got a chance of 1 in 10 or whatever that might be. You want to have some feeling that you're going to be putting such a strong foot forward that that's not just money you're throwing away. You're already willing to offer more than list price, say by 4 or 5% or something like that. You're already willing to get that inspection done and everything, as well as make sure that, say, that the title has been reviewed. That's another contingency. You've already looked through that, and again, they're required to give you clear title anyway. But if you see anything in there that would have stood out, you could get that set aside, and anything else that might stick out that might make it where it's a cleaner offer. So the other thing I have seen that people have done, and this again is a strategy that's risky, but if you're absolutely solid that you're going to move forward and absolutely solid about your financing, and you've kind of already made sure all those are nailed down, is to make the earnest money non-refundable. So I've seen this happen where, and I've done it myself to make my buyer look better and more committed, that they write out an earnest money check, and instead of writing it to the escrow company or whatever trust fund they're going to hold the earnest money in, they write that check right out to the seller and go ahead and deposit it. It's yours. If we don't move forward, you get to keep it anyway. So go ahead. Here's your money in advance. And that has a little bit of a psychological effect. The seller's like, whoa, they're not going to back out no matter what, especially if it's a check for 50 or 100,000 or some significant amount. So again, not something I would recommend. And in fact, in all of these cases, I don't really recommend them. What I do is I tell people, my buyers, their options, and it's really up to the buyers to get comfortable around their own due diligence about which way they want to move forward. So I try to be very careful in sharing what the risks are, to try these various methods to get your offer accepted. Do you see many earnest monies written out directly to sellers?
I've only seen that once. So, and it was, it does put a different intensity on the transaction for sure. And actually with this transaction too, unfortunately the buyers and the buyer's agent didn't let me know that they were doing this, or that they were waiving the financing contingency. So I really can't stress enough how important it is that you do, make sure that your loan officer is on the same page with you and talk and talk to them about it, because you do want to make sure that if you are going to put yourself at risk a little bit more, that you do everything you can to eliminate the risk.
Yeah, no, and that's a very good point, and maybe the most important one, and we can kind of close on that today, is that the what's critical about any of these strategies you may use to get a multiple offer accepted is that you are in clear communication with all the parties involved, because everything has to work perfectly for all of these things to go right. And if they don't go right, your earnest money is probably at risk, and there's at a very high percentage of chance that it's at risk. And so you want to be absolutely sure that everybody involved is saying, yeah, that sounds good. We can move forward with that. I'm absolutely sure that this is going to work. You know, we've got all of your information back for your credit report. That last piece of information on that old student loan is in, and we've got that cleared out. Any little minor detail that could throw a wrench in it, that if you've waived that contingency, that your earnest money might just be flying out the window. You want to nail those down. And the last thing you want to do is to have, I'm sure Rhonda wants to hear, is she gets a phone call and says, oh, by the way, we waived our financing contingency and wrote a big earnest money check, but you told us we could close in 2 weeks, right? And Rhonda's like, oh, no, because of this and that and the other, it's probably going to be 3 or 4 or whatever, right?
Mm-hmm.
Yeah.
Right, right.
So, you want to make sure, and the agent should have that discussion with the lending officer as well. Everybody should be in good communication, not just you as a buyer trying to do this. If your agent is involved, your agent should be having these discussions with the lender specifically because they know the right questions about this property and about you, to make sure that you're getting all the information you need to make that good decision. I guess I can't emphasize that enough, because that's what Ron and I, when we find a problem, it's because of communication. It almost always is. So,
right.
Anything else you want to add to this? I think we've covered everything. So the various types of contingencies you can waive, just so that you, at least in our area in Seattle, the main ones are the inspection contingency. That's the most frequently done, and it's usually done by having a pre-inspection before you make an offer. That way you can say, I've already done that. I know what the problems are with the house, but I'm comfortable moving forward anyway and not requesting any repairs be done. The second one is the title contingency. It's a minor contingency, but it just makes a cleaner offer. The third one, again, a minor one, the information verification of that paragraph X I mentioned. Again, kind of a minor one and very rarely used, but just makes it a cleaner offer if it's waived. And then it's down to the more serious and risky ones, the financing contingency and the appraisal contingency. Rhonda, you want to mention just real quickly about the difference between those two, because they're a little bit interconnected.
Well, the financing contingency, is just about like the mortgage, and we have a certain period of time that we have to actually respond and let everyone know the application's been made and that everything's proceeding well. And then the appraisal contingency is going to be, I think they're both kind of self-explanatory. Just that the home has appraised for at least the sales price, and then if it hasn't, then what the steps are after that to remedy that. When that's waived, those options are gone. You're buying the house regardless of what the appraised value has come in at, or you're losing your earnest money.
Right.
So,
and I had seen in the past, maybe it's a little less common now, where someone would keep the financing contingency and just waive the appraisal, or vice versa. So it's actually more common to say, listen, I'm not worried about if it appraises, because I've got enough money to where if it doesn't, I can get, instead of just a 20% down loan, I could do 30 or 35 or something like that. So that, especially when you bid the house up, removing the appraisal portion, if you're comfortable with the fact that you might have a lower appraisal and have a higher loan to value ratio in your loan, you can do that. And if that's explained well by the selling agent to the listing agent and to the seller, that sometimes is almost as powerful as waiving the full financing contingency. But by keeping that financing contingency, if something goes awry, let's say you get in an auto accident and you aren't able to complete you have your job give you verification because you got laid off because of your injuries or something out of the ordinary that would be, kind of out of left field. then you've at least got your financing contingency there and can hang on to that.
Right,
So,
right.
yeah. Okay, well, I think that kind of covers it for today. I think our next one, we're doing these more like about once a month now. And we haven't really set that as a specific schedule, but we might, because I know we've been a little bit intermittent, but we're both busy, and we've done these. This is our 53rd one, so it's not like we can cover every topic 6 times. So as things come up in the Seattle real estate market and the mortgage market, I think that it's more appropriate to maybe do it once a month. How about you, Rhonda? What do you think about that?
I think that makes great sense.
Yeah, let's plan on that. And that way people can kind of count on when we are here and know that there's going to be more of these. And as news and changes in the market happen, we'll absolutely put those to the top of the list of things. I think next time we may be doing one on property casualty and floods and landslides and other issues that go with insurance of property when you're purchasing it. I've got somebody lined up with that, and maybe another one soon on the cloud and things that are going on now in the real estate market within the cloud space, which is going to be more and more an issue. So that's it for today. I want to thank everybody for joining us. You can find us now. I don't know if you knew this, Rhonda. We've got a new URL for our full playlist. There's been some recent top-level domains released by Internet. So, it's not just .com and .gov anymore. There's one called .chat. So we have seattlerealestate.chat.
Oh, cool.
And that takes you right to our YouTube playlist of all 50-something Hangouts that we've done. So feel free to use that. I'll put that in the show notes. And you can always leave us a note on Twitter, hashtag what is it? SRE chat?
Yeah, Seattle RE chat, I think.
Seattle RE chat. I think you're right. And you can always reach us that way. So thanks again, everybody, and hope to see you soon.
Thank you.
Okay, bye.
Bye-bye.